Welcome to your Daily Five. I'm today's host, Bruce Fraser. We are going to do something extra special today, a Wyckoff Re-Accumulation workshop. And this is among my favorite topics to discuss. And I love writing about it, written about it in many blogs. We are going to take today's ideas from the Wyckoff Market Report. We profile the very best ideas at a point in time, Roman Bogomazov and myself, in this Wyckoff Market Report, which is published every Friday. We look at these Wyckoфfian setups, ideas, the ones that are most appropriate for the time that we're in the market. Now we're talking about reaccumulation, and I'll show you why in just a second. If you want to learn more about the Wyckoff Market Report, you can see here at Wyckoff Analytics, you can go to that website and see examples of this publication, which we are very proud of. Here is the Lifecycle Model. Roman did this years ago. It's absolutely brilliant. You can see it's a little fuzzy because it's a copy of a copy, so to speak. But nonetheless, you should see it because it's really good. The life cycle model has accumulation occurring at a cyclic low. Then you have important markup phases that occur, and the markup phase ultimately concludes with distribution at the top. The thing that we're seeing now, because we are in a big markup phase, is a series of reaccumulation structures. These are an incredibly important concept to really understand and trade well, because there are so many of them along the way in different stocks in uptrends when the market is going higher. Such a useful tool, such a useful capability. Go to Roman's classes where he teaches more on the Wyckoff trading cycles and also on markups, accumulation, distribution, and so on. Okay, so with this, here are two reaccumulation structures that were created by one of our brilliant students years ago. And this schematic, these are two of them. There are a number of different looks, but I wanted to give you an example of the different schematics. The thing is, we don't do pattern recognition in Wyckoff. We look at the characteristics of prices as they go through periods of trends, trading ranges, distribution, and so on. And we call these areas phases. So phase A through E, you can see here that each one of these phases has a unique characteristic of price and volume that helps us to understand where we are in the unfolding cycle. And these are key to us being able to identify the best ideas as we go through time. So here are two examples. This one here has a spring characteristic in it. This one is more of a pivot or a trading range, a hinge. Notice in both cases that we have near vertical ascents as we complete reaccumulation and go upward. This is because absorption is occurring in reaccumulation. Stock is going from weak hands to strong hands as large interests and form interests are accumulating and holding shares for much higher prices. And therefore, when the pivot or the hinge comes to a conclusion in a reaccumulation, stock is scarce, difficult to buy in large quantities, and institutions, the only way they can get the stock that they want is to pay higher prices. Stocks move easily upward after reaccumulation is concluded. Here is an example in the green box. You can see here in Hank's schematic, this beautiful upward ascent of prices higher and higher as it's going into a new uptrend. And this is with diminished volatility as reaccumulation is being completed. Here are two blogs that I've written at Wyckoff, Power Charting, StockCharts.com. Go read those blogs. And also there are others that I've done on reaccumulation. Here is just an example of distribution versus reaccumulation. You can see here that distribution occurs in the same way that reaccumulation does. It starts with a buying climax, automatic reaction, and a range-bound condition. The difference is what I just mentioned before, and that is volatility diminishes during reaccumulation, volatility increases during distribution. This is because large interests are disgorging their stock, they're selling it, they no longer want to own this company because they think it's fully valued. Reaccumulation is quite the opposite. Okay, so let's look at some examples. Dunkin' Donuts. Dunkin' Donuts here in the yellow shaded areas represents a reaccumulation. And this reaccumulation at the end of September over here, this was a jump out of the reaccumulation, which had an upward tilt to it and a backup, we call it, or a pause before a new uptrend begins. We can see here that that's the case right there on the same chart. This is subsequently what happened. We profiled the stock at the time in late September as a trading candidate for a case study or for observation. And that was at the end of September, and the stock went into its near vertical ascent as we would expect in reaccumulation. And then it was taken private. So kind of sad, really, because we hate to lose our good trading stocks. This stock went out at about around 105, and we hate to see it go, but this is a great example of the dynamic of reaccumulation in action. Here's another great trading stock, Shake Shack. This stock was also profiled at that time. You can see that it jumped out of its reaccumulation. This is late September right here. Here's the reaccumulation structure. It came out, backed up. Above the reaccumulation area, relative strength was already confirming higher prices. This count here in yellow, which you can see on the point and figure, counts 113 to 118. And at the time, Shake Shack was in the high 60s. Well, guess what? Here we are. And another reaccumulation formed after it jumped out, which you can see part of that here. And so it jumped out and ascended. And now look, Shake Shack is in the 116 area, fulfilling both of those reaccumulation counts. Here's Qualcomm. Qualcomm has a beautiful reaccumulation structure, quite large, goes back into 2019. See this buying climax, automatic reaction, range bound condition, jumps out, backs up. A classic place to look at this stock. This was reported, studied on 10/16 in the Wyckoff Market Report. Look at these counts. 163 to 181 is the smaller count. The larger count, 241 to 271. Well, looking at this, this is where we are now. Notice that 163 is the lower count. We're currently at approximately 162. So here we can see Qualcomm having a really dynamic ascent, but notice this, and likely we could see another reaccumulation occur. It's sort of happening now, actually, is that there is still higher potential for Qualcomm. Look for additional reaccumulations as Qualcomm works its way higher. Here is an interesting profiled stock, Molson Coors. At the time, this is October 15th when this one was profiled, so to speak, and you can see here that the stock was around $35.50 at the time. This is subsequently what happened. This looks like cyclic accumulation here. So you can see the downward move into a spring and a test. Well, classic conclusion to phase C of an accumulation area, and then notice the near vertical ascent up to the resistance area in a sign of strength. A last point of support is a minor pullback, has trouble pulling back much at all, and then continues its really strong upward trend. Now it's up and out, may pause and have a backup above resistance, but we can see the dynamics of a stock that is closely held. It's well absorbed. So, and notice here the characteristic of a jump as it's jumping out of the spring and the test. Well, this was profiled. Here was the spring right here, and then the subsequent test, and onward Molson Coors went. So a great case study. Okay, with the little bit of time we have left, I'll just show you that you can also do distribution characteristics, and we will study distribution. In this case, it's the price of bonds. This is a trading point and figure chart. We saw TLT going down potentially to 149 at the extreme of its trading point and figure. Here is a vertical chart of that, and currently it's around 152. And then with the time we have left, let's look at ROKU. ROKU is a stock that was profiled on October 2nd as a Wyckoffian characteristic stock. There is a deep look at this reaccumulation after a climactic surge and an automatic reaction here and here, and then a spring or shakeout type structure here. You can see that we call this phase C. Here's the test. And as it goes back up into the trading area, it pauses. Well, now we have a series of pauses and backups, shallow, narrow trading ranges after completing phase C and phase D is a clue that stock is in strong hands. So what happened next? So here is a closer look at the reaccumulation structure. You can see the jump out and the back up. And also I want to emphasize the relative strength, because the confirmation of relative strength on the way up is really, really helpful. And here is the point and figure chart. This point and figure chart counts up to 495 to 590. And at the time of this stock being profiled, it was around 197. So, and it was just up and out of its reaccumulation area. So now here is ROKU, which is at 408. So you can see here that this is roughly the area that we started to profile it. It was up and out of its reaccumulation structure. Here's the markup phase. Keep in mind, looking at the point and figure, that there may have to be more reaccumulation work along the way, but there are higher point and figure counts in this reaccumulation structure. So there we have it. And well, there's the shading. This is your Daily 5. I'm Bruce Fraser. I'm so glad you were here. Go check out more about reaccumulations, and go check out the Wyckoff Market Report. Take care, my friends. See you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.